if you don't mind munongoratidza chiro zvepalwati.
Can you repeat your question? I didn't quite get it.
So like sometimes vanotoshandisa like 4 hour h4 ne-h1 to analyze the structure, the market
Yes.
structure.
Let's say yeah. Yes.
So let's say ndaona kuti it will take some days kuti risvike chero mu60%, 70% memory
Mm-hmm.
feed level. So is it possible to show us maybe like how to use my 15-minute time frame, maybe just scalping?
All right. For example, we have a trade that we have here, and this is V25, right? So what you see on V25 is generally we are on our 4 hour time frame, and we see that we are in a downtrend. We have a low, we have a high, we have a low, we have a high, we have a low, we have a high, we have a low. Now what we want to make is a high. So from my own basic understanding, from what you're saying is how can you now um, make best use of the lower time frames since we are seeing that we are selling, right? So there are two ways that we can enter here. One is we can buy to sell, and the other one is we can wait for the sale. But once you are here, the main area that you should be focused on currently is not this whole area in the market, is this area that I've just marked where there is a high and a low. So first things first, if it's me, what I do is I box that area. Like here, I can box this area, right? Okay, there's someone with background noise. Um, just a second. Someone with a way P30 light. I don't know what it is. I've muted them. Right. So what you see here is now we have a high and a low, right? This being our high and this being our low, right? So let me show you something. This being our high and this being our low over here. Now, since we've taken this whole analysis from H4, what we want to do is, let me zoom in here. This is what I do normally on a day-to-day basis, the way that I'm marking my chart. So now that I see that I have a high and a low, the first thing is I would want to ask myself, why is there any reason that price might choose to retrace up there and then fall? For me, yes, that reason is there. And is this gap that we see in the H4 time frame, right? Now, as we see it in the H4 time frame, I wouldn't want to come and place my fib when I go in a lower time frame. What I would do is straight away I would place my fib in that H4 time frame. Sorry, I chose the wrong two there. So I would come and mark the high and I would also come and mark the low. Right. Now I'm flexible to use my smaller time frame because I know that price, what's attracting price to retrace here is this gap over here that it has to cover. So straight away I can either go to my H2, right? But as time goes on, you finally understand that as you get used to time frames, right? There are some certain things that you even see before you even move to that time frame. So as of now, there's no really need for me to just stay in my H2. Rather, maybe what I can do is I can take note of this gap here as well. I can take note of this gap here, right? This is where price will most probably come to after it fills this gap that we see here. Now, I would want to come to my, let's say, M30. For us and understanding your question, your fear is, let's say, let me go back to H2. Your fear is to wait for this trade to come to the 0.618 or the 0.718. Why? Because it might take a lot of time. So you would want to utilize the opportunity to buy it as it comes to that level. That's how I'm understanding your question. So what we now have to do is we now have to look for buys in this area here, but keeping it in mind that on a larger time frame we are selling, right? So the best way we can do that is we scale to smaller time frames. So yeah, let's come to smaller time frames. Let's go to M30. M30, we don't really term it as a smaller time frame. It's in between, right? What do I see in my M30 that makes sense? Nothing much that I can see, right? But I'm sure that if I go to my M15 now, I can see structure that's building up nicely. So let's go to that M15 and see what I want to see. So in our M15, we can now safely say, based from what we are seeing, we can mark structure in this M15. And how is that so? If we were in our M30, let me go back to the M30. If we were in our M30, between the high and the low, in that H4, we can't really mark structure. What we can really say is, maybe this is a high, maybe this is a low, maybe this is a high, maybe this is a low, right? But if we now come to our M15 and stick in our M15, what we generally see is we have a clear low, a clear high, a clear low here, a clear high, a clear low here, a clear high, a clear low, a clear high, a clear low, a break of structure here. And now what do we see? We now see that we are now uptrending and it. So when we reach an area like this now, this is where we now have to start looking for entries in our smaller time frame. Like on this case, this is okay. I've muted someone who had background noise. So what we see here is there's a certain point whereby price was playing here. This is our demand, right? Sorry, let me just come and mark it nicely. This is our demand zone here, meaning that price only has the only thing that price is to do at this point in time is just to come tap in this demand zone and then start buying, going where? Going up. But when it's going up, where is it going up? What's the exact level? This is happening in real time, meaning that we are expecting our V25 to buy anytime now. We've already had the confirmations. We already have the confirmations, which is the break of structure here. We also broke another high here, which is where price was playing around. So we're expecting price exactly here to come and then buy, going up. This is what's actually happening, meaning that we can actually enter in this trade in real life. And these are actually the kind of trades that I like. I actually like teaching something that's happening in real time. So now the question is, if it buys, this started as a as a general question, but it's not turning into a lesson. Anyways, it's fine. So if it buys, right, where are we expecting price to go up to? Remember what I told you. We said we have things like gaps, we have order blocks, and we have things like supply and demand. Now, here what we see is we have a supply that's over here that I'm just marking here. I think we can all see it. And that supply is also backed up by what? We have a gap. At the same time, we also have an OB. So we might say price my target to come to this supply zone, hit the OB, and then continue going down. Why is it going to continue going down? Because overall, in the larger time frame, we are selling. But then at the same time, remember what I told you, when we are taking order blocks, we take order blocks that have broken structure before. This one broke structure. Where it broke structure here. But then here comes another trouble. Here comes something again. We have a low again here. And this loss, this low, the structure was broken mainly by which OB? By this OB over here. But I want you to look at it. When this OB broke this structure over here, this was a straight away trade. You can actually see bearish candles. Like I wonder, like having that bearish run. I should zika with force and it with momentum. But then here, price was like a bit lazy. And it only started moving after it broke this structure over here. So I would say my price is most likely going to buy from here, where I said this is happening in real time. We can actually buy this trade. And as it buys, it's supposed to come to this supply over here. take out that supply, hit that order block, and then fall and hit it. So I don't know if I answered you well. It ended up being more of like I ended up explaining Ragawanda, but then I think it was necessary. I don't know if I answered you, Mavado.
I I'm
Uh,
answered. I'm answered.
You are answered.
Yeah, so so we can take this trade now, or there's other confirmation.
Yeah, we can take this trade now. Like I said, these are the trades that I like. I like doing something in real time, something that no one could. Okay, we've learned about this, and this is actually happening in real time. And I want you to look at this. This we are in our M15, but already you can see that price is respecting our demand area over here. You see, price is starting to give us that confirmation. Again, if you come and you mark this area, it's going to give you a morning star. I think we can all see it. Just as much as this area came and gave you a morning star here. And that area is also the area that happens to have a demand zone. So it's actually a trade we can take even right now. But
That
then our stop losses, remember, according to what we learned, they're always below your low.
okay.
All right.
Yeah, I'm answered. Thank you.
All right. Thank you. All right. I want questions, guys. I want questions. Anyone else with a question that he or she feels like they need to ask? Remember, this is a lunch break soon, meaning that we only ask questions on this session. All right. Samuel Ryan, I have lowered your hand. You can ask. For the guys that don't know which pay it is, this one is volatility 25. Some guys I know that you're just seeing R25. Mr. Samuel Ryan, you can ask.
Can you please go back on the H4?
All right, let me go back to the H4. I'm now back to my H4.
Okay. Can you please uh, go back and zoom the part where you
All right.
mentioned highs and
I
lows?
don't know if it's my network or it's yours, but I can't seem to hear exactly what you're saying. Okay, you can repeat your question. I think your network was a bit sketchy. Is it? Sad.
I was
Silent
asking
guys. Yes.
you go back up, go back up where you were.
Okay. Again, guys, I don't know. Maybe it's my network, but I can't seem to get your question. Um, okay, can you text me the question on WhatsApp and then I share it with everyone else because I can't seem to hear you clearly. Oh, I don't know if it's my network or yours.
Can you hear me now?
Yeah, I can hear you now.
Am I sounding clearly now?
Yeah, you're sounding
Yeah, I
clear.
was saying, could you please zoom back out where you were showing lower highs and low?
Okay, I've zoomed out.
Can you please zoom out? Yes.
Yeah.
Could you please maybe draw your lower highs and lower lows again from the previous leg?
Okay. So we have a low, we have a high, we have a low, we have a high here, we have a low, we have a high, we have a low, and then now we want a high.
Consolidation there.
Which one?
Just where there's multiple candlesticks that are side by side, yeah,
Yeah,
right there.
yes.
So since that's a low, the retracement back, it didn't come back to the 50% of the um uh previous zone there where there's a gap. So if this setup presented itself, uh,
All
would
right.
I leave it like that because it didn't retrace back to a 50%,
All right.
but me knowing it's going in a downtrend, what do I do in a situation like that?
It did retrace back to the 50. Let me show you something. Now, if we go back to H4, let me use the H4. If we go to H4, what you see is, I want us to agree. I also want you to agree with me, right? Okay, let me remove all this since we are done with this.
Yes,
Right. I want you to agree with me. This is our high. This area here is our high. Let me take the pointer. This area here is our high. Do you agree?
yes,
And this area here is our low. Do you agree?
yes. But do you see where your first pointer is?
Yes, yeah. Yeah.
Yes. I mean, I'm talking about that retracement that went back up. So the previous high I'm talking about is the one before this one you pointed,
This one.
the one at the top. If you,
This one.
no,
Or,
if you
or
scroll
this one.
back up, uh, even upwards where the trend
All
came
right.
from, do you see? Yeah,
All right. Now I understand your
yes,
question. You're saying since we have a low here and
yes,
a high, and then we have another low here, but this consolidation with this high didn't come up as much as here. Can we consider that
yes,
we all right? Now remember there is a lesson that we did about some retracements that don't even like my and like they don't go back to the 50% of your range, meaning that even if you come and you take your fib and place it here and here, you won't see that trade coming back to the 50 or 60 or 71%. And that's completely normal. It happens. But then now, if we were to come to the daily, I would want to show you something. If we were to come back to the daily chart, or, or let's start with the 8 hour, is it? Let me choose a time frame that you can clearly see.
yes,
If we were to come to the 8 hour, you just actually see that this is an area where if we mark it, let me remove this. This is basically an area where, let me take my rectangle. This is basically an area where there's a daily supply zone, an 8 hour supply zone. So what do we know about supply when it comes out of that box? Sprints going down and it leaving my gaps. So what it generally means is price at some point we just have to come back here, utilize the gap, fill in the supply, and
yes.
then fall. Yeah, it's completely normal. Sometimes we don't get my full. It's not always when price comes and give us a full retracement, and then we say it was supposed to do that. Sometimes it just doesn't.
Okay.
Sometimes it just doesn't. Sometimes it doesn't. I hope I answered you.
No, you.
All right.
Yes, you have. Thank you.
All right. And then we have a question from Nashe. You can ask. Nashe, I've unmuted you. You can ask. Nashe or Nesh?
And Maggie, Nancy, I don't know.
All right. Seems as if there's no question from Nashe. Anyone else with a question? Let's ask guys areas where we are not understanding. As long as it's forex related, I'm free to help. Nashe or Nesh, I've unmuted you again. You can ask.
Hello.
Yeah, we can hear you.
Okay. So I have a question
All right.
on yes. Let's say waita ma-setups ako ese ukati move and everything is in place. Then you enter. Pauno enter yo beta ngoita it's either inoita kunge yambuti inoita kunge yawati kwire mbichana bet dzika or inotongodzika pasi. Then you better ngokwira kana kuti nezvima long weeks then goes to anticipated moves. Unoizvita sei tomboti maybe it's gold and maybe you have a balance of about 30 panei pachizoitwa sei pakadaro.
So you've made your analysis. Let me try to rephrase your question. You've made your analysis, right? And then
Yes.
soon after you enter, it goes in the opposite direction,
Yes.
weakening in the opposite direction, but then ends up going your way.
Yes.
All right. The first thing is, okay, let me give you an example. There's a trade that we entered here.
Okay.
I think it's just an hour ago. This one on V51S.
Yes.
I think on what I'm going to say, I'm also going to answer your question.
Okay.
So what we can see is V50S, is it selling or is buying? According to what we can see, it's buying and it.
Yes, it's buying.
And then what you'd see is pace up. Yanga ichi buy highs and lows, highs and lows, highs and lows. And then you can keep this engulfing like rejection. But then now if you come back again and you go to, let's jump to H1. I think what I'm about to say will answer your question. When we got in H1, many people started selling this pair because they were saying kuti they see a trend line. And I'm sure kuti we were at this point over here.
Yeah.
I'm sure kuti we were at this point over here. Right. Now, this candlestick that you see here, the one that's green here, it was red up to this point, up to this tip here. And people were like, Tabreka, so it's supposed to go down. And it was leaving my rejections. These rejections, this is what people were basing on. So
Oh.
I say to myself, this is liquidity. But this is trend line liquidity that's been taken away. Because many people were anticipating right trend line, then it's supposed to buy straight away. At the same time, we had an OB rangariri panapa. Anditi. So
Yeah.
price moves in a way yekuti this was the OB, and then price was weakening in that OB. And I knew kuti this candlestick rangariri bearish, it was supposed to close really bullish. But at the same time, it was weakening. And after I entered, I think ndatombopinda kana mlosi kuma $80-90 pandapinda papa. But then now someone comes and says, break a trend line and it's now going to sell. And can't you see kuti as much as rikukupa ma rejections, these rejections are it actually means kuti pushing to the downside. And I think now is the right time for me to show you and go to M15. So what happens is mostly unongoswa to receive a proper confirmation. Price is just playing around. I don't know if you understand the concept of inducement. Do you understand the concept of inducement?
No.
Yeah. We did a video on inducement. Now,
Okay.
as we did a video on inducement, and let me not talk about that. If you come to your M15 here, what you see is our price yanonoka kutipa a confirmation, which was a break of structure at this area. So yanonoka kutipa that confirmation. Many people thought kuti we are selling just because we have something that looks like a sale. Forgetting kuti kuno kuku we had an OB and priced it to tap in that OB. There's no way his price wouldn't tap in that OB. So there's certain points of interest where unyasokuona kuti why I hope you get the whole reason why I'm saying this. Unyasokuona kuti you have an order block that's panapa. Let me come and draw a box here. Unyasokuona kuti maybe you have an OB that's here and your price is somewhere around this area over here. Obviously, what price is going to do is going to weak in this area, and then it moves up. But that's one of the things that you should be very careful about. Okay, when price is weakening after I entered, why is it weakening? Most probably, it just has to few more orders. And secondly, it's just inducing people. A lot of people get scared when they start seeing my weeks. But no matter 30 minutes, 40 minutes, doing proper analysis, the moment you enter and you start seeing weeks, you start seeing a sale. Whereas at the beginning, wanna buy. So it's just inducing fear and making you change your mind into saying, all right, dandaona buy, sakarigandi buy mo sale. Then you end up getting in that sale. So sometimes it's not like the market is watching you alone. This is what most people feel. Most people feel like the market is watching them alone. As soon as they enter, then the trade starts weakening or start going like a bit not in their direction. Whereas, remember, your entry criteria, the market makers, they know it. All right, this guy is coming to enter on an area where there's a gap. What if that gap a bit? You're gonna get scared and say, let me exit. So it's something that naturally happens. There's no way trigger. It's just a process of inducement. Where you are seeing which some people they're exiting that trade that you're in and then going in the opposite direction, but then you end up winning at the end of the day. So I think that's the best way I can answer you. Maybe unless if you want me to answer you technically, I don't know.
Okay. So what you're trying to say is, let's say for example, pane order block redu.
Yes.
That means I can actually take the opportunity yekuti ndotengera inongopinda order block chero riri kuti sell in analysis riri kuti buy ndotongopinda buy iyo iri kuti sell it.
I'm not understanding.
Alright. Auntie, you are saying which at times there are moments whereby inongodzikira mbichana, right? That means I can take the opportunity yekuplace buy rangu painongodzika mbichana ipapo so that I can.
All right. For every trade that we enter, we have different entry criteria, and the most important one, should common for those entry criteria is confirmation. I can't say just because trade rangu rapinda OB. Okay, like here we see that this trade rapinda order block with the first week, we would have sold, but did I have confirmation you couldn't stay? No. But then now, if we jump straight, let me just jump straight to M5 or to M15. If we jump to smaller time frames within that area, I always say this, we have to look for our market structure in smaller time frames so that they give us the basic confirmation that we need to say we're either buying or we are either selling a trade. And the most basic confirmation is a break of structure or a change of character. Basically, anything that gives us confidence to say that we are now reversing the trend. Because remember, in that smaller time frame as well, there's not really any direction here. So let me switch on to my M5. I don't know why it's delaying. So let me refresh this page and then you can see. All right. Right, it is refreshed. And then I'll come, okay, that was V50, right? So I'll come to my V50 and then press here, right? And then I'll come to my M5. Right. So what I would now start looking for is trade rangu in my M5. What I can see is, yes, there is an OB here. I think the OB is here. Let me mark it clearly again. I think it's somewhere here in our H4. Let me just cross confirm. Let me confirm if I didn't lie when I marked. Right. So this is our OB, right? Now, if this is our OB, remember, with market structure in that H4, that we are saying we have a high, a low, a high, a low, a high, a low, a high, a low, and then now we want another high. But remember, if we switch direct to our M5, what you'd see is with M5 is its own market structure, whereby what you see is we see a high, a low, a low, a high, a low, a high, a low, a high, and then a change of character. This is now what we start looking for. Change of characters and break of structure. These are now the things that are going to say, all right, we tapped in that order block, but soon after tapping in that order block, we saw a what? A change of character. This is when we start taking entries. Although some people would be like, I want to take it directly in this OB, I would wait for that change of character or that break of structure, and then I'll start taking entries from there. And now the good part is the moment you start seeing these wicks coming back to an area where you broke your structure or your change of character and tapping in those areas, this gives you confidence even to add more entries. So we just don't enter based from the perspective that we've gotten into a point of entry. We need to have a supporting factor, and besides any other factor, the factor number one is either a change of character or a break of structure, and then we go up. But then again, you see what happens when you get in that OB. It's characterized by wicks now. You see these wicks, they are now wicking in that OB, wicking in that OB, wicking in that OB, wicking in that OB, meaning that at every point of interest that you are going to have, you should get these. And these basically what they mean is rejections. These are price rejections, and we are rejecting to sell, we want to buy more. I don't know if I answered you.
Yeah, that's correct.
I don't know if I answered you, because sometimes I
yes,
think
you did.
the best way to answer is to just involve everything. All right. We have a question from Tobias Chitambo. I've unmuted you and lowered your hand. You can ask. We have a minute remaining.
Okay, thank you very much. So I wanted to know if there's a difference between an order block and a point of interest. And when marking an order block, do we use the whole candle or just? Thank you.
All right. There's no difference between an order block and a point of interest. An order block is a point of interest. A point of interest generally is a point where we are expecting reactions to happen.
Then when marking the order block, do we also include the width or we just mark the body?
Right. For order blocks, it now depends. If the body is smaller tails, we mark the bodies only. But if the body is bigger tails, we include the tails. If the tails are actually bigger than the body, we include the tails.
Okay.
Yeah, or if either one of the tails is bigger than the body on that order block, between the sell side or in the buy side, we include it. All right, guys. We have less than a minute remaining now. I shall post this session on YouTube, and if there's anyone with questions, feel free to ask in the comment section, and then I would happily answer you on tomorrow's lunch.